way to the low,
right?
I have to remember that I can't um, treat those entries the same, you know?
Well, what I want you to do is clear your mind for a second and kind of let's kind of kind of go into the homework of what we were talking about. Before I get
Yeah, yeah.
started, just really quick, let me get this. Hold on one second. There we go. Got it. Okay, so before we get started, just important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only, or coaching session, and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large financial rewards, but also large financial risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Do not trade with money you cannot afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve the profits or losses similar to those discussed in this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, now that we got that out of the way. So a couple of things. You're kind of making up the process a little bit as you go along, and I'd like you to get on process. So number one thing I want to start with is trading Fed is always harder than not trading Fed, right? Like tomorrow we should return to a regular market, but it's because you never know. Are you going to get this big swinging market? Or are you going to get this really tight, congested market? Are you going to get a chance to get in? Is it going to reverse hard? Today we got what I think no one expected, which was no movement at all. It was just total grind after the Fed today. So we'll see how we look tomorrow. And the market's been sitting in balance for a couple of days now, right? So um, I know that you have the software on your desktop. So let's talk about the waves to the low or the waves to the high. And why don't we use ES since you trade that predominantly?
Yeah.
And had you, let's just look at this afternoon and see what's set up, right? So
Mm-hmm.
So remember, there's a very basic concept that we have. This is clearly right here is your wave to the high, right?
Right. Yep.
Okay.
Agreed.
So once you're underneath here, once you closed underneath here, let me get the line. Okay. Once you closed underneath with what I call the orthodox close underneath, right? That should have told you that any pushback into this whole area should have given you high odds for a trade. So the next thing you want to do, the next automatic thing you want to do is go, okay, when I push back in, I am looking for my highest odds setup. So those encompass two separate setups, right? Were you trading NQ or were you trading ES this afternoon?
No, ES in the afternoon. Yeah, I caught an NQ earlier on, which was short from the way a break of the way to the high, but the ES was in the afternoon. That's usually what I'm trading.
Okay, so when I see that you gave away money, like the first thing that I look at, once I'm underneath here, I can get really aggressive on what's called the orthodox engulfing bars. And there's an
Okay.
algo that fires that shows you like, hey, this bar is exceptional, right? So once we were here, if you look and you followed that process, this would have been your first short right here on that bar. See
Got
that?
it.
So,
Yep.
which that bar alone would have paid you very nicely. Had you gotten aggressive and taken this bar, you would have gotten stopped, but you would have recovered any losses that you had right here, and then you're into the last hour. So you really
I would.
just
Yeah.
you wouldn't trade it. So when you tell me, hey, I gave back my P&L this afternoon, how did that happen? Can you break me down?
So I think what happened is I took a short. Where was it? Let's see. So we got the break of the wave to the low. I took the what was it? This the yellow speed bar, like 1310. Do you see that? It's like just before 1310, right? Yeah, yeah.
Okay,
So I got in there and didn't adjust for the fact that like we're not going to roll down every time, you know.
Right.
Um,
So what was your
and
plan?
that's the
Because,
adjustment I made. I should have made is taking that profit earlier or recognizing that I need to be able to hold it to let it roll down.
well, wait, well, let's break that down for a second, right? So the idea is, first
Okay.
of all, that you're not guessing at what's going to work and what isn't going to work, and that you're really clear
Right.
as to what the best setup is. So you had three options. This speed bar works best when when the last bar in the wave is the highest volume. Okay,
Right.
and that's
Right.
why it folded back upon you. And so it's important that you get all
Yeah.
the details right. So when you look, so let's isolate that, right? So over here,
Okay.
you just didn't have anywhere close to the highest volume on the last bar. And in
No.
my opinion, you shouldn't have touched that trade at all.
Okay.
That
Okay. Yeah. Yeah.
that
I was
that
thinking it's the first one after the break, and earlier in the day, the first retracement was working, but that's not necessarily going to work every time. So
well, that particular one's going to stop a lot, as a matter of fact. If you don't have a high
okay.
volume bar associated with that speed bar, or
Okay.
the other one is you can get the no demand immediately preceding the speed bar. So the pink bar is the no
Okay.
demand, right?
Right.
So that's why this was such a good setup right here. You had no demand followed by orthodox engulfing bar and a triangle down, but you would have wanted to enter off this engulfing
Yeah.
bar. And you see you took a
Yeah.
little bit of heat on it, right? But you can see that,
Sure.
look at the difference in extensions, right? On this trade,
Absolutely.
you enter right here at 43.55, and you're going to
Yeah.
extend down to 43.43. That's a 12-point trade on one contract. That's $600 a contract, right?
Okay. Yep.
And when you're over here, your max. So if we look, I'm always looking at my decision and what was available to me, right? So your entry
Right.
would have been right here at
Yeah.
43.52. The best you could have
Yep.
done before getting stopped out would have been 43.48.75. And I'm trying to accomplish two things when I'm coaching somebody, and you in particular, right? First of all, I want to eliminate the mediocre entries, right?
Yeah.
So if I was going to list that, did you get the speed bar portion of this correct? Well, you did. Okay. And I would say this is a B grade entry and a B game
Okay.
plan entry, right? And a lot of times what I've seen, Ben, when I'm working with these, you know you're getting towards the end of the day, and sometimes you haven't hit that dollar goal that you're looking for, and you get
Mm-hmm.
aggressive, right? And that happens
Yep.
to me
Yep.
too.
For sure.
But you should be pushing the other way on your trading, right? You should be going,
Yeah.
hey, I need the absolute best entry so that I can make out on this trade, right? So
Yep.
well, let me show you what I meant by that. Had you gone, and what we're doing is we're trying to stack up everything at one time, right? So if you look over here, so this one to qualify, this is a no demand followed by an engulfing bar. So one of the things we can do to learn, right? So what I want you to do is you get the no demand engulfing bar, right? Well, the first thing I want to
Okay.
ask is, I don't want to look at that trade and go, well, that worked because Simon said it worked. I want to look at that trade and figure out, well, does it work all the time? Like, is that a high odds? So let's go someplace else, right? And look and see if we can find a similar kind of MO, right, on a trade setup. So if you look over here earlier in the day, and this would have actually been prior to the open, this would have been our wave to the high, right? Right.
Yep.
I have too many lines on here. I don't know why I have all these pink lines, but let me see if I can get rid of them. This has to be copied from some other chart, and we will fix it. Ha. I knew this was true.
Uh-huh.
Let's make sure it's not linked to anything else. There we go. So
Cool.
this was the wave that we had to get underneath, right?
Yes.
Okay. Now once we're underneath that wave, let's just go look at the PA, right? How did
Okay.
that PA play out? So there was it's always a little bit tricky. This was the high right here. So
Yeah.
remember the rule on the wave to the highs, if you don't get a complete orthodox close above, and this was 8:39 a.m., but I'm still going to show you the first high odds opportunity for you to get a trade, and you would have never taken it, was 8:23. Let's actually roll to after the open because we wouldn't have taken it at that time frame, right? So let's go through
No.
and just get past. And guys, for those who are watching this video, we just don't trade the 8:30 to 9 o'clock spot, but we could flip this. We could flip the concept around and go, well, this was our wave to the low after the open right here. See that?
Right. Yep. I do.
Okay. So we'll just flip it around. It works the same way both ways. So
yeah. And now we're looking for purple, not pink.
Right. Okay. So if you look over here.
Oh yeah, I see it.
Okay. Well, don't. So we can see some underneath, but what's the first thing that we need to do? First thing
Well, no, I mean after. Yeah.
Right. The first thing we want to do
beyond the wave to the low.
Right. So first thing we want to do is get beyond this wave to the low, and we do that right here. Mission accomplished. Yep. Right. So remember, yep. For our trader who just, we always have the kind of the example of the guy who has $1 million account and trades one contract and doesn't care. That client went long at that point and was really quite happy with the net result. Right.
Right.
Okay.
Right.
So, but now you and I are looking, because we're using leverage, we're looking to get a better trade-off, right? And so we have a couple of options here. So if you look over here, what are the combinations? So first of all, we're always looking for when the highest volume bar comes in at the very end of the wave. And there's a couple of exceptions to it, but it's clearly not here, right? Clearly the bar that has the highest volume. So the exception to that is you can throw out the first bar in that volume. Right? You can throw out the first bar. That's the only real exception. And then if the second to last bar is the highest volume, then you're good to go. So where you'll see that having come into play here would have been right here. This bar ended up being the highest volume under that rule, followed by an orthodox engulfing bar. We know that because there's a little green dot on top, and you got paid. That was right at 11:58 this morning. Like that was pretty much a layup. Now you could say, well, Simon, look how. Go ahead, Ben. Yeah. Go ahead.
Oh no, I took that trade. I took that trade actually.
Okay, so that was picture perfect, right? You didn't have to do anything. Then at this point, right, we're coming up on, even though we get a new wave, so we're going to erase everything and start over again. This is our new wave to the high. The problem is we're coming up right on the release of the Fed minutes, right?
Which is why I exited early. Yep. Right. So I got out. Yep.
So in this situation, we don't want to do anything because we want to let it kind of reset. If this is 1 o'clock, what I want to do at that point is go, okay, set me up a new wave, right? So effectively, that becomes, this right here becomes my wave to the low, and then this becomes my wave to the high right here. This became, so I'm going to show you. The number came out. It pushed a little bit. We pushed down, A, B, C, D. This became my wave to the low. Okay, so now in order to go higher, the first thing I need to see is an orthodox close above there. I get the orthodox close above there, but again, remember, we're trading during Fed moments, right? What I wanted to show you here, and what was important in this particular scenario, is that man, we picked a tricky situation there, because this, when you look back at this 1 o'clock, I guess actually the 1 o'clock wave, and you see part of the problem with trading the Fed, usually the 1 o'clock wave, the way it worked is this is the 1 o'clock, right? This ended up being the wave to the high.
Yes.
And it was confusing because you don't know how volatile that's going to be. And you can see that ended up playing out where that was the wave to the high, orthodox close underneath, and then it gave you your best entry for 10 points right there. But let's pause for a second. Let's go look at another area, right? If we go look at without the...
Yeah, because the Fed makes things different.
The Fed makes things very difficult, right? So if you go back and look at like yesterday morning at the open, right? So here's the 8:30 open right here yesterday. Let's do the same process. That is the 8:30 open. So that means this becomes my wave to the high. I'm going to highlight it for you right here.
All right.
Okay, so remember, one of the things I'm trying to help accomplish here is I don't want just random trades taken, right? A lot of times
Right.
people will look at the move in the market and go, well, I want to trade everything. Like, and you can trade this, right? Once you get the orthodox close underneath, if you can size this correctly, any short once you get here with an orthodox close above here, and you're set.
Okay.
Like that trade will work, right? But remember, what I'm trying to do is get very pinpointed in my entries, very focused on my entries, very spot on my entries, so I don't have any confusion. Does that make sense to you?
Absolutely. Yeah, it does.
Okay, so what I want done is I want the best odds, which means I need either, once I'm underneath there, I either need an orthodox engulfing bar, right, is a valid entry, a preferably, and then I can up it, preferably with a high volume, right? And then I can also
Right.
use high volume with the speed bar, or I can use a no demand with an orthodox. So those are 3 trades. So if you'll see up here, we just didn't get it. This did not set up over here for what we were looking for. And there's 2 things
Right.
to do when you're learning the process, right? That can be frustrating because you go, well, that was the optimal entry, and that's true.
Yeah.
But the algo didn't fire there, and you got to decide whether you're trading the algo or you're trading what you think, right? And
Right.
what we're trying to do is move away from a what do I think, which tends to leave us as break-even traders, to what does the
Yeah.
algo tell us. So if we look at that series there, right? What the algo told us is, first of all, this became the wave. This became the wave to the low. So unless I get an orthodox close above there, I can aggressively take my shorts. Here you
Okay.
can see I got a no demand engulfing bar, and if I use my 12-point stop, I clearly got a very nice extension to the downside. As a matter of fact, we can quantify that extension. That particular trade, right, was from 43.50 to 43.44. That's $300 a contract in that one trade, because your entry is on the, as soon as you put a sell stop right on the bottom of this bar, as soon as it prints. Does that make sense?
Yes.
Okay. Your next entry in that sequence, right, if you either wanted to add to the trade or initiate again, is you came, remember, this is our, I'm going to draw this out again. This is our wave to the high. This is our, you see this wave right, oh, I'm going to use that. This is our first wave. This is our next wave. And in this wave, see how the last bar in the wave has all the volume on it right there?
Definitely.
Okay.
Yep.
All the volume on it followed by a speed bar. So volume, speed bar. Your entry would have been as soon as that speed bar closed. So you're going to put a sell stop in this case at 43, 48, 50. You're usually going to get filled at that or maybe a tick. And now your extension's worth 43.48 down to 43.42. Again, that's another $300. And you're, when we keep in mind someone like yourself who's like, hey, I've got to go to work, I've got things I've got to do, those quick trades are worth a lot of money. And if you'll see, they pushed up one more time, and in all these cases, we never get above a wave to the high. So what comes up over here to the right now is this entry right here, and you got to remember what the risk is in each of these trades. You do have to make a decision on how you're going to manage it, but this is your entry again on this bar, that engulfing bar, right? So you have 43.53 and a quarter. Your stop is going to be 2 ticks above that, so it's 53 and a quarter to 57, or I believe that's 3 3/4 points, right? So the first thing I want to know is, can I get 4 points out of that trade? Basically, is what I want to know. Can I get to 49 right here? Can I get to this 48.75, right? And you'll see that you got your 1-to-1 risk reward off on every single one of those entries there. Does that make sense?
I see it.
And you're not looking for longs yet. Why are you not looking for longs?
Because we have not closed back, made an orthodox close above the wave
That's right. As a
to
matter,
yeah. Now is it the wave to the low in this case?
well, now what you're going to look at is you're going to say because we broke all these swings that if we get above this 43.57, you can start looking
Right.
for longs.
Okay.
But you don't want to
Okay.
overcomplicate it.
Right.
Like
That's what I thought. Okay.
just keep it when you're beginning, right? Don't overcomplicate it. Look like, is it truly like, is it clearly a wave to the low? Or is this
Yeah.
still like this low didn't get broken right here? So I'm probably still going to
Yeah.
go with I've got to be above this to start looking for longs. And what
Okay.
that should do for you psychologically is pretty important, Ben. What that should do is it gives you one side to work on the trade, right? But secondly, you should
Yeah.
stop
Yeah.
asking what the market's going to do and go, what's the algo going to do? Is it going to set me up? Like when I look up here, is that an entry? No. Why is it not an entry? There's no high volume bar, right? So I can keep watching.
Mm-hmm.
Again, no entry. Even if
Mm-hmm.
it works, we don't care about it. That's not what our objective is. Now that's an engulfing bar right there. See that? Now you got to remember, since you've gotten below here, two things are going on.
Yep.
First of all, we're in balance, and you've pulled out of this thing 1, 2, 3 trades. So as you know from being in the room with me, right? The first thing I say is, well, how many times do I want to take the same setup in the same area, right?
Yeah.
So,
Yeah.
but you also don't want to be afraid. Let's say this is going to stop. Let's see if it stops.
Okay.
Okay, so this would, well, not yet. It stops now. Okay, but the whole
Yeah.
point was your RR there was 1-to-1 or 2-to-1 in many cases, right? And you're not there trying to fight it. And as you know,
Right.
I'm very much
Right.
against continuing to trade in straight line and consolidation. And what I'm going to say in that point, so remember when we look at the trade, just like today, I'm going to look at the key areas now. You got to remember how important the key area is for a trade, right? So
Yeah.
when we bring that
Yeah.
in, so here, let's do this really quick. This ought to be relatively painless to reload. Okay, so when we look from the, so when we look from Tuesday, and we look from Monday, right? So if we spread that out a little bit, this is Monday's close right here,
Okay.
right?
Oh yeah. Yeah.
So there's two things. Number one, and this was Monday's high somewhere in here. So the first thing I'm going to
Mm-hmm.
say is, look, in order to grab a swing, we want to get above here or we want to get below here, right?
Yeah.
And so
Yes.
so what you'll see is when we knock that back, and then the next area would have been below
Yeah.
here, which obviously we didn't achieve, right? So
Yeah.
when you come back and look at this trade from this perspective, and then you knock it down to the range that we're looking in,
Okay.
okay. So what you're going to see there is early in the day, right? So that was Wednesday, excuse me, on Tuesday, that where we kept bouncing, so that line that was critical in the sand. So remember, it
Uh-huh.
was a balanced day. So now look at how that line played a point and getting a reversal all day. So all these shorts that we're getting up here on Tuesday, so this is a chop and balance day, right? You want to be on the
Yeah.
edges, but everything was attempting to get below that prior day's
Mm-hmm.
low and
Mm-hmm.
and bouncing off of that. So you can go, well, wait a minute, Simon, that may be the case, but where did I get my if that was the case, where did I get my trade set up from? And I
Mm-hmm.
can show you because if you look, this ended up being a wave to the low right over here. See how it ticked one
Yep.
low? And then this was your wave. So we never get underneath this wave. But then the next question is, do we get above this wave here? Because this wave was the wave to the low, right? And you'll see,
Right.
right? Because it was so choppy, we did get above. It was all the way
Yeah.
over here, right? And the bottom of that
Yeah.
wave, so if we erase all those lines, because I don't want to just make it look like, oh, it's all one way, and it was clearly balanced, but this was the wave. This was the, wow, this was actually the wave to the low,
Uh-huh.
all the way, believe it or not, right out of the gate, and we never got above or below it the rest of the day. You see that? We just stayed inside on that Tuesday all day long. It doesn't mean that the setups didn't work, because they did, but
Right.
what you were left with was you had prior day's low, which was down here, and we kept pushing
Yeah.
down towards that prior day's low, and we kept trapping underneath it, right? So if you look at what
Yes.
signals triggered for you, the best signals that triggered for you within that context was once we got on a wave to a high and we got underneath it. So that would have been, the first time through would have been right over here, right? You can clearly see we get a wave to a high, we
Yeah. There's like a break. Hmm.
we don't get underneath it there, but then we clearly get underneath, way up here, and we get underneath this way to the high. So everything really kind of starts out for us on this right side afterwards, right? That's why
I.
this trade ended up being so big and juicy. Same thing with this, 5 points, 10 points, because and you'll notice that you're getting the orthodox close. Notice how many times, what I
Hmm.
want you to do for homework on your screen, right, is I want you to do this. Once you have a bias and you think which way the market's going to go, I want you to go, how many times do I get the pink bar, which is an algo, right, followed
Yep.
by an engulfing bar, and how many times does that pay me, and how many times does that
Okay.
stop me, and do it both ways, but then break
Right.
it down further. Am I above or below a wave, right? So when we look, if I was doing my homework, I'm going to go, okay, I'm going to do the
Yeah.
homework that Simon told me to do, right? So this doesn't qualify, right? None of this qualifies in here because I can just see I don't get it. This qualified, no demand, engulfing
Uh-huh.
bar, that paid me, right?
Okay.
No demand. This should have kept you in within 2 ticks. It might have
Yeah.
stopped you there, but it should have kept you in, and you end up getting paid, right? If you put your stop, and that's the other thing you would do is if it got stopped out, well, how much did it get stopped out by? Like, what does the stop actually have to be? But in this
Hmm.
case, it would have been 47. You would have needed, if you used a 2 tick stop, you got stopped. If you used a 1 point stop behind, you survived, and you were able to capture out of that trade a 50 to 65 trade to the long side,
Yeah.
right?
That's actually. Yep. Yep.
Again,
Yep. And the thing that I'm seeing that I'm doing wrong on these chop days is I'm taking every one of these smaller swings and trying to figure out, do I adjust my wave to the lower, wave to the high? And I'm seeing now that you only do it if you've actually switched the bias. Like you don't just keep moving it. You only move it if you were in the short condition and then you went long condition, then you went short again. That's the only time when you would be moving a line, just to the next swing. It looks like. I don't know if I'm making sense, but
you are,
something clicked for me.
and you've got it. You've got it correct. Like, see, this is the opening wave right here down. This is the opening
Yeah.
wave down. Okay, so remember what you want to keep writing down is that to every trading method, in every trading method, there's going to be psychological pluses and minuses, right? And again, I like you to do 2 things every day. Again, this is from Jarrett Tendler: A game, B game, C game, right? So I know what my C game
Hmm.
looks like, and if I keep pressing on fixing my C game, then my A game tends to take care of itself, if that makes sense,
Right.
right?
It does.
But so one of the things that helps everyone in the room, right, is if you go, hey, can I get underneath or above a wave to the high, and then can I get the appropriate setup? So there's a cost to
Hmm.
that, right? As traders, most people who try to day trade are 50-50 at best. Like, that involves the gross majority of people. They spend time, whether they go on 1 or 2 week streaks, and you know this from being in the rooms you're in, right? They either go 1 or 2 week streaks, 2 or 3 month streaks, or 1 or 2 day streaks. But one way or the other, they give it back, right? And it's
Yeah.
hair pulling out kind of behavior, right?
Yes.
So
Yes.
so what we're trying to do is go, well, how do you fix that problem? How do you fix that problem, right? So the first thing is we simplify, which is what I was asking you to do your homework on, and we go, okay, this here is the wave to the low. So we want to, from the open, right? So the open was at 830. We pushed up. That was the first push down. And when we get above that, you can see that we took off. So what was the problem with that particular setup? Well, first of all, the algo didn't fire in any way that would we be able to manifest a trade in, right? Secondly, it took off straight. So let's say you're a trader who goes, hey, I think we're going to go up right off the open, right?
Right.
Well, that trade didn't set up, and then it runs a lot. Like in this case, it went 30 points, right? And so the first response can be, well, Simon's process sucks. The whole algo sucks. I just missed a 30-point trade. That would have made my whole week, and I would have gotten it, right? So first of all, you got to know who you are. Are you the guy that's trying to capture every move in the market? Or are you the guy that goes, I want to stack up P&L day over day, week over week, month over month, year over year, right? And most people, 99% of people, cannot get trade from that perspective, right? But if you would
Not
stay
consistently.
not consistently, but if you would stay calm in this process, what you would have seen is that this over here, right? Just follow me. This ends up being the wave to the high right here, and that wave starts right over here. So now look at the other side. What if you'd been the other trader? Let's say you've been a trader that goes, you know what? We are going to go to zero. This market is going to tank.
Right.
And you start shorting here and here. And I know you've been around long enough. You see people start going on tilt when it's going straight up like this, and they just say stop after stop after stop, right?
Right.
So for us, the first time we're looking, even though we have other ways of kind of cheating and getting an early entry in on this trade, right?
Okay.
But the first time for us is this bar right here tells us, hey, now we know this is resistance above us. And now, no matter what kind of trader you are, you can start making choices. So you have one very simple choice, right? In this case, you could just simply go, hey, I'm going to short a regular contract or a micro at 43.95, and I'm going to put my stop at 44.10. And that trade paid for you. Like you can see, it just it rolled down. It rolled down beautifully. Hold on one second. So when we started to roll down here, right?
Right.
When we started to roll down here like this, right? That was one option. But then the next thing you're doing is going, well, how would have I captured that? How would have I captured that trade? So remember what I said is we have 2-bar combos. They're aggressive, right? Or larger wave setups, and they're aggressive. So we know we're underneath the wave. This is where people have challenges with the process, right? So remember, everyone thinks, most retail traders think that the easiest trades are up here, but they're actually the hardest because the consolidation really shakes you out of your trade, right? So see right over here how we get a 2-bar combo. See how it's 2 bars followed by the yellow bar is a speed bar, and down it goes. Do you see that?
I do.
That was one entry, and it's a 1-bar stop, right? Then we rotate.
A 1-bar stop. Okay.
We rotate back up. We don't get the highest volume, but what do we get right here? Again, remember, you're working off a 1-bar stop, so your 1-to-1 risk reward is going to come in quickly. So, right? And most people will say, well, my gosh, Simon, that's a really hard trade to take. But if you look, once you're underneath the wave to the high, which was here, you had this, you had this,
right?
And then you had really this right here was valid, and then you'll even see here gave you a little bit of scalp out. Now remember, while we're working, right? So that's already 1 in the afternoon. So remember, 2 things happened there. A, you didn't get run over in the open drive higher, right? And then we had other clues that this was going to be a good area to short in at any rate, right? Because why did we know that?
we knew it for sure because of if you look at the higher time frame.
Right. And if you looked at the higher time frame, you would have seen this would have been kind of one of our lines in the sand. And once we get
Yep.
above it, what's the first thing I'm saying in the room?
You're already gotten over it. So look for opportunities to go back inside.
Yeah, look for opportunities to go back inside and look for our high odds swings. And we're not even really covering the high odds entry because if you look when you were up here, so the idea of having flexibility with it, whether you're using the micros or the regular contracts, right, is that the one thing that you got is once you got above here, and if you look, see how your high volume came within, I'm looking right over here,
Okay.
within 2 bars.
Yeah.
See that?
Yep.
So you could have used, so that's high volume followed by a speed bar. That's a valid entry, correct?
Oh yeah.
Okay. You have to be willing to take a stop against the high on that, but it's a very tiny
Yeah.
stop, right? And not only
It
that,
is.
but Ben, you don't have to be willing to go full size on that trade either. Let's say you have the ability to trade, whether you can trade 10 regular contracts or 10 micros, doesn't matter, right? You could
Mm-hmm.
anchor that trade with 3 or 4 contracts, 3 or 4 micros, right? And then go, let's see how this looks. Let's see how it develops. Now, what would have been ideal is if we would have gotten an orthodox close underneath over here, and then we got a setup
Yeah.
right over here. But we didn't get it, right? Sometimes that happens. Sometimes
Right.
he goes, hey,
Right.
I'm looking for this thing. And that would have been beautiful. But if you look, if you're anchored over here, right? Can you imagine by the time you put on, let's say you start with 4 micros here, now you're at 4 micros over
Yeah.
here, or 4 regular and 4 regular, your break even's back over here, right? You
Yep.
just get a free
Yep.
ride from 84 on full size, right? Or more for a
Yeah.
20 or 30 point move to the downside. To me, that is an immense benefit. Does that make sense to me?
Oh, no doubt. I mean, that's better than I do in most weeks. If I can knock out 50 points in what is that, an hour and a half?
Right. And if you look over here, right? So you go, well, what do we do over here? So you got to remember that. Hold on 1 second here. If you remember over here, this is so you would go, Simon, well, let's talk about this because this turned into a trend day down, right? Well, what about this
Yeah.
situation here? So first of all, remember we have a very simple client who just takes one contract long when we get above or below a wave, and he doesn't look for any special entries, right? Or
Uh-huh.
she doesn't. So that client
Right.
got long there, right? So we know that in this case, one of the very few times that client took a loss right over here, right?
Yeah.
What did that client
Yeah.
also do right here?
He shorted again
Yeah, well, he would have
because
flipped the
we've got
position because he
underneath
got
the new.
underneath the wave to the high.
Yeah.
See how we
Yeah.
broke the swing? So once we got underneath, he just would have flipped. Again, he's trading one contract on a very big account.
Yeah.
And so that's a little bit um th- that's how
It's
that
simplified, but it makes sense.
right. So then when you're moving when you look, first of all, this is the last hour of the day, right? So were there any
Yeah.
other clues? Did anything long set up? One of the things that I would have said is, we're getting, and I constantly hammer, and I know you hear me in the room, guys, we're tired. We made a lot of money. Why are we going to keep pressing this to the downside, right? But if you had
Right.
been, let's say you'd said, no, 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 I'm looking for my long side trade. So what did set up in here for a long side trade? So if you look, even though it got choppy, you had a 2 bar power bar combo right here. See that? Followed by a speed bar. Okay.
Yeah.
You had a high volume bar second from the end, followed by a speed bar. Those all
Uh-huh.
paid you to the upside, right? And then the 1 bar you would have gotten stopped on, and stopped on well, by the way, because remember, you'd have been long here, you'd have been long here, but all you're doing
Yeah.
is scalping out for 2 or 3 points. I mean, it's just It's just getting no lift, and you're playing with fire at the end of the day there, right? And this is the bar.
Yeah.
If you were trying to get the turn, that's the bar you took a stop on, but it was a 1 bar stop against
Uh-huh.
a massive amount of risk. It still made sense to play your day out properly over and over again. So here's what I need you to move in your journal, right? Ben, these are some of the things I hear you doing repeatedly. You're you're not keeping track of how much you're up during the day, and you get to this, well, I don't have, I don't get to trade every day all day long, right? I have a limited amount of time and I want to maximize it. That's one of your pressure buttons that you put on yourself. And
Yes.
if I had my way, I would have you completely throw that button away.
Okay.
Because just in the time that I've known you, I can't tell you how many times you've told me I was up in the morning
Yep.
and I gave it back. I was up in the morning and I gave it back, or I'm break even and I'm flat, right? And
Yep.
so there's
Yep.
there's an issue in there for you. Somewhere in there, there's an issue for you. You have a belief system, and you need to find out what that belief system is, because that belief system says it's not okay for you to leave, right?
Hmm.
And so, in
Hmm.
most people who do that, these are the things they're telling themselves. I have to make money, right? I have to make money to get out of the situation I'm in. And the situation they're in may not even be a bad situation. I've seen high earning doctors and lawyers and pilots and businessmen say the same things themselves. I've got to get out of this situation. Well, the situation they're referencing to is a time situation, not a money
Yeah.
situation. Okay.
Yep. Yep.
Secondly, if you're any kind of sports fan, no matter what sports you follow, most quarterbacks, which is what we're doing, we're making a lot of decisions. We're very busy. Quarterbacks, pitchers, right? Even great
Yeah.
soccer players, they don't play the whole game, right?
Yeah.
Why?
Yeah.
Mental fatigue sets in, right? It's very hard to keep your emotions in check relative to what you want to do, right? So most of the money is there between 9 a.m. and 11 a.m. And occasionally in the afternoon, we have an exceptional opportunity. Occasionally in the afternoon, we have an exceptional opportunity, right? So why
Right.
not let that exceptional opportunity work for you instead of against you, right? Why not let
Yeah.
that go? Hey, this is different, and we know where those exceptional opportunities are going to come from, because, like, whether it's oil, like if you look at this is today's levels from ES, right? The exceptional levels on
Right.
opportunity existed below 43.28. We had it marked off, and you can see once at 1 a.m. and once at 9 a.m. We got below those levels. It gave the opportunity, and it actually gave a 40-point swing out of those levels. It's hard to believe, but it did when you look back on it in reverse. Those were the levels that were
Yeah.
published beforehand. So if you're going to do that, that's when I want you to go, hey, above here and below here, yeah, I really want to work really hard to get my trade, right? But in between
Right.
here, look
Yeah.
how easily, if you were discussing with another trader, let's say you had a trader here and he goes, I really thought we were going to go to the high of the day over here and take out that
Yeah.
43.64. Well, guess what?
Right.
That guy was right, wasn't he? We did go out and take
Yeah.
43.64. Do you think out of 10
Yeah.
traders who put on that position who are day traders, how many survived to take out the high?
None.
None. None of them did.
One, maybe none, probably none.
One, probably none, right? And then
Yep.
the same story goes, the same story goes over, over you've got to manage the trade. And then how many traders do you think when they go, oh, we broke the low, I'm going to short down here, so they shorten the hole, right? Instead of going, hey, I'm looking for my
Yeah.
long setups here, I'm looking for my short setups up here. This part of the process should be reconfiguring how you're looking at the market. Does that make
Yeah.
sense?
Yeah, it does. It does. And it's interesting because I do that for my swing trading on a regular basis. I think I need to apply that reasoning to when it comes to is there a good enough opportunity to even stay, you know, logged in the afternoon, for instance, that I can easily see that because I would, I wouldn't. That's the thing, the whole day. I knew there wasn't going to be a swing entry. Once we pulled back out of that like 43.30 area, I knew I wasn't going to be buying from a swing opportunity. So why should I be expecting that we're going to, blow out the low or the high before close? It's kind of
Uh,
ridiculous.
I'm totally with you, right? And so, look, the goal here of this coaching session is not to inundate you with various setups. So this is what I want you to do, right? First, I still want you to work on the wave to the high and then the wave to the low. But
Okay.
what I
Yeah.
want you to do is take a higher time frame chart like this, and you can just overlay
Okay.
them. So just go, okay. So first of all, you can cheat, right? So we're going to change this a little bit. We're going to make this a day session only.
Okay.
Let me duplicate this chart. Oops, don't want to do that. Let's see if I can do this. Okay, let's get rid of this. Okay, so the first thing I want you to do is a very, very, very simple exercise, right?
Okay.
You can take there's a function on CR chart, you hit F6 and you
F6. Okay.
hit daily open, high, low, close, add,
Okay.
and hit OK.
All right.
Okay,
All right.
so that's going to show you the red line's the low, green line's the high, and
Okay.
and that's very simple, right? And what I want you to,
Right.
so the first thing I want you to learn from this is the number of times, like, so let's just go look on 10.7 to 10.8, right? So I can see on 10.8,
Okay.
right, I got below the prior day's low,
Yeah.
and it swung back up the other way for quite a nice trade, right?
Uh-huh.
I can see on 10.11, right? See how I got above the prior day's high? And so you already know what I'm going to say in the room, right? Hey, this is one
Right.
of our key areas, right?
Yep. Yep.
So now we're going to look and go, okay, where's my opportunity for the short? And you can see that one was monstrous, right? On the
Yeah.
next day
Yeah.
down
And
here,
but you had to wait for it. That's the thing. You had to wait for that opportunity. Just like you said. Yeah.
exactly. And then what I want you to do is go, okay, I see on 10.12 that we got underneath here, and it gave me a trade, a significant rotation back up in the morning, right? So
Yeah.
what did that look like? So go take that 10-12 area, right? Or even as far back as you want to go, right? I go back
Right.
and I study tons and tons of days. So like this would be a great example for me over here. Hold on, we don't have very many days loaded, so let me load up like 30 days.
Yeah. Yeah. I think sometimes it's good to go back to a day you can't actually remember.
Yes.
I imagine because I did the same thing.
Okay, so like when I look back over here, okay, so like when I look at this over here,
Okay.
okay, so
Yeah.
on this day I had a couple of choices. Obviously I had, so I'm just going to mark them all off, right? I had
Okay. Okay.
this, none of them have been broken, right? See that? How none of those have been
Yeah.
broken? I had this.
Yeah.
So like you're like, well, wait a minute. We're above all this stuff, and then I had this over here, right? So what it
Uh-huh.
turned out was, so go look on the 7th, right? Hey, once I got above 44.06, what did this trade look like? How long did it take to develop? What were the signs? Did we get underneath the wave? Did it set up so that I had the high odds and then I would know, hey, because I'm above 44.06, I have a good chance of rolling back down. Over here, go look on the 1st, right? Underneath the
Yep.
critical line in the sand. Over here on the 4th. And look how many times that produces it. Now take that piece of information and now,
Okay.
so that's one very broad piece of information. It would be very hard to load up a trade based on that alone, correct? So
You mean yeah. But I mean, if you open it up, we should be able to see it. You just got to go to that day, right?
right, like so for example, we could go to 10.4 and look at the low. So if
Yeah.
we look at 10.4, okay, so the line on the sand on 10.4 would have been 42.78. This is what we're
Okay.
looking for. Okay, so we wanted it to trade underneath here. Okay, so we've done that,
Yes.
right? The first time we
Yes.
traded underneath, but we couldn't, and then so then go through the formula. What's the next thing we want?
Yeah.
Outside of being uber aggressive, we want to get above a wave to the low. Well, this is
Yeah.
currently over here, our wave to the low, but the market does us a favor. It comes back over
Mm-hmm.
and it gives us a new wave to the low right here. So I'm going to highlight it, right?
Okay.
So then you start digging, right? You go, oh, I'm above a wave to the low. So the first thing we want to look at is, did our guy who just bought one contract right here, how did he make out, right? So we look at that person
Right.
and we're like, oh, it was a long consolidation, but they made money, right? It pushed
Yeah.
out of there, right? It took
Yeah.
them forever,
Yeah. Eventually. Yeah.
but they had a way and it wasn't easy, but they did not lose money on their trade, right? And
Right.
eventually, if they
Right.
were bigger term swing traders, they really got the push out of there, right? But that was a very
Which
difficult day.
further shows how finding the wave to the low and waiting to have that orthodox close over it is useful, because a lot of times it actually works.
Well, it works so much. It's crazy how much it works actually.
Yeah.
So now when you got over here, you're like, okay, I'm above the wave to the low right here, right?
Yeah.
This is my wave to the low. I'm above. Let me make sure I got that right.
That's
Sorry,
right.
this was. Let's erase that.
Oh, I see. It's got a little wick.
Yeah, it was over here. It was this one.
Okay, but you know what? The location is pretty much the same.
The location is the same. Now, go back through process, right? You're gonna go, okay,
Okay.
because first of all, it doesn't mean that you won't necessarily have to scramble, right? If you took
Yeah.
this long, if this rolled back in, so the most ideal
Yeah.
situation here is that we roll back into this wave and set up,
Yes.
right? So anything you take up
Yeah.
here is a little bit more aggressive, right? But
Of course.
once you're in here, right? So what are the setups that we're looking for? So one of the setups that we look for is the 2-bar combo, which you got right here, followed by a speed bar. And I may or may not have lost money on that. It lifted, but it really didn't lift a lot, right? But
Yeah.
that's
Maybe not enough.
fine. I know I'm going to take, the goal isn't to eliminate all stops. The goal is to set me up to have a winning situation on my hands, right? So if you
Yeah.
look,
Absolutely.
when we came in here, why does none of this qualify in here? The speed bars, none of this right in here. Why does none of this qualify right in here for a long?
We don't have the highest volume bar at the end.
And you don't have an orthodox engulfing.
Oh, and yeah, right. We haven't even had an orthodox close yet.
But look what the market.
The orthodox. What's it called? The alga with the diamond.
That's right. So, but if you look over here, right, see how we get a no demand
There it is.
and then engulfing bar. So this trade right here, it's important to go back and measure. So you've got to remember you already had the advantage of what? You're below the critical line in the sand. You know that sellers have a very good chance of trapping themselves there. So now just
Yeah.
put your line right here and ask what was your P&L. So it's
Yeah. There's your entry.
74 to 81. So certainly more than enough to get your one-to-one risk reward off here, right?
Oh yeah.
And then look how it comes back in even one more time. And this is where it gave us the granddaddy of them all, right?
That one set up too.
So we know we're in. We get the highest volume bar right at the end of the wave. There's the algo bar right here. And again, this one pushed you for what? 10 points. Those two trades, that was like a 5 and a 10-point trade, 15 points. That's $750 per contract. So
yeah,
I don't know how to make it. And not only that, but you didn't get run over on the way down, right?
No.
And you had to keep that one line in the sand. You knew, even though it didn't materialize here, but the potential for that swing to come out, even though it didn't materialize by the end of the day, it took overnight and then it went. It's still, the potential was there for that trade to develop for you. It was pretty much perfect, right? And
those are the kind of days I should be hanging around, waiting for that opportunity, because when those work out, it is worth it. But on a day like today, where we're just grinding and there's, we know there's a Fed minutes coming out, like this would have been a perfect day to, go out to lunch or something after, being up, couple points. I was up like 8 points in the morning, just like, just that's a decent day.
100%. So remember, it will take a mind shift around because
Yeah.
you've come from a swing perspective on a lot of this.
Right.
And there's nothing wrong with that swing perspective. But even if you're going to do the swing perspective, use the algo to set up your swing and then use the prime locations, right? Getting above or below prior day's highs or the other key locations that we have in the room to go, hey, this is going to set me up for a really great trade. Don't be the guy that tries to capture everything. Be the guy that tries to capture the best things, because this was what your potential was right here. You could have ended up, sometimes I promise you, if you set that up and you try to swing it, you'll end up with 30, 40, 50 point days. I've got coaching clients that do it pretty regularly, actually. Ron in particular hits those trades. So your homework assignment is go break down a 15-minute chart with a high and the low. Go look when it breaks the prior day's high or a prior day's high or prior day's low, and then go look how the algo structures itself after that to give you the best entry. Remember, the goal is great RR and low risk combined, right? And the potential to get a big fat trade.
Yeah, that none of them stop out, but that you have a good opportunity for that good RR. And low risk, like you said.
Yeah, so remember, we float between 60 and 70% win rate, right? So as you develop skill over time, you'll develop and go, hey, I know this is an exceptional opportunity, and I'll be able to teach you how to stack up the trades for the bigger swings, right? But right now, all I'm trying to do is get you into the mindset of, hey, don't trade the middle of the range, right? Like this is a perfect example right here, right? The guy who doesn't trade until he's on the edges, right? This guy's over here going, so if you look, if you went long over here underneath this 42.93 on the first, right? This swung all the way around, right? So we would have had two lines in the sand that day. We would have had 43.73 and 42.93, right? So imagine someone comes in here and says, hey, I'm going to be really smart. I'm going to short right at the mid on a 50 retrace. Well, that guy got smoked, right? He's like, oh, I should have known. Now, you might not have caught this short to the downside because it swept, but look what you would have gotten the next day. Okay, I'm underneath. I know where to look for my trade. And then over here to look for this short over here, particularly if you're a swing trader, you would have started looking above 43, 45 going, this is the area. And then we can start to differentiate as you get better between above the wave to the high and the entries below the wave to the high and start anchoring those trades for really fat trades. It'll just take us a little bit of time to get through it, but we'll get through it. Anyways, I thought that was a great session. Do you have any questions before we wrap up?
I don't think I had a bunch of questions and you've answered them, so I really appreciate it. It's things are getting a lot more clear, and I think I know exactly what I need to do to keep working on it. So that's the important thing.
Great. Well, thanks for letting me share this with your followers and the people on on my blog side, on your followers. I really think we have something here that's special that people are willing to dedicate themselves to, like you are. That the money that people dream about is there. They need a good process to grab it, and
it's right there. This is a process that does work. I mean, when I do it right, it pays. So that's why I'm sticking with it.
100%.
I'm putting a lot of effort into it for a good reason.
And I'm going to throw a shameless self pitch there, guys. If you know Ben or you'd like to visit the room, send me an email to Trade and Perform or hit up Ben via Twitter or any of the other numerous ways. The man's amazingly socially connected. But or you can send me an email to tradeandperform@gmail.com. I'm happy to extend you a 3-day pass and come see what we're all about. But I think you're doing a great job, man. And just keep up the work.
Thanks, Simon. Thanks so much.
Hey, I'll talk to you tomorrow morning, buddy.
Okay, sounds good.
Have a great night. Bye-bye.
You too.